Welcome to the Rural Classroom Plus. This is Steve Barton, and thank you for tuning in. This is where we take your questions and we ask Rick himself. Rick, how are you doing today, sir?
Very well. Getting ready for the big boot camp. So Albert and I are here in Anacortes, messing up my house and getting ready to deliver a bunch of value for students on Saturday.
Awesome. What can we expect with this gold boot camp?
Well, for those who are unfamiliar with our boot camps, they are quarterly deep dives into one topic or another. 8-hour-long sessions where we try to bring together faculty with 30 or 40 years experience in the topic at hand and make people better investors. We've done things like uranium, we've done silver, we've done a bunch of different boot camps. The audience said gold, tackle gold. So we did tackle gold, but it was too big a topic to do in one boot camp. 6 months ago, we did an overview of gold, why there's a gold bull market, what role gold fills in society, how it fits into your portfolio, and how to own and buy and store physical gold. The second part of that series that we did 3 months ago was the best of the best, talking about the big, high-quality senior producers. Now we're doing the rest of the gold space. We did it in that order because gold bull markets follow a predictable pattern, from the metal to the best of the best, down to the rest. And mercifully for us, at every step of the stage with this boot camp series, we've caught the market exactly correctly. After the 6 month ago thing, the metal boomed. After the senior producers boomed. And while we're doing this segment, the rest of them are booming. Investors can expect to learn how to buy and why to buy what I call the best of the rest, the second tier majors, how to play the optionality game, companies that will benefit the most from a rising gold price, how to buy single asset producers or regional plays that will likely be consolidated, how to buy the developers, and finally, how to buy the explorers. It's going to be a wonderful 8-hour session like every other product from Rule Investment Media and the Rule Classroom. This comes with an absolute money back guarantee. If for any reason whatsoever you don't think you got your money's worth, no worry, we'll give it back. But understand this, we're going to work you very, very hard. We're going to give you 8 hours of intense programming. In fact, more programming than you can consume in 8 hours. The consequence of that is that we're going to give you the availability of the recordings, which you will need to play, probably more than once. This course is meant for everybody who invests in gold, except those people who buy the Sunday paper so they can do the crossword puzzles and the funny pages. This is not about that. This is about working very, very hard to make money from the diligent application of education on your portfolio. Really, really looking forward to this.
I am as well. October 4th, this Saturday from 8 a.m. to 4 p.m. Pacific time. And as a serial attendee of all your boot camps, they've been very, very good to my brokerage account. So that is awesome. And I'm looking forward to this one as well.
Well, that suggests you've worked very hard. So congratulations.
Thank you. Thank you. All righty. Do you have any opening thoughts? Anything you want to get off your chest before we go to questions?
Yeah, I do. I mentioned last week and in a couple of interviews since that I personally was selling part of my speculative position. And that's raised a lot of comment on this forum and in other forums. And so I want to talk about that a little bit. First of all, I believe the gold bull market, the precious metals bull market, is very much intact. And I expect the gold equities to go higher, including in the month of October, which is one of the reasons why I chose October as my month to sell. I believe that I'm acting against the cycle, which is to say that the money is moving from the best of the best down to the rest. And I'm selling speculative positions and buying a little bit more of the best, which is to say I'm moving against the money. Why am I doing this? Well, in simple arithmetic sense, I arrived to this market much earlier than most of the people who listen to me. 5 years too early could sometimes be categorized as wrong, but let's leave that aside. I did some calculations and I learned that by selling about 25% of my speculative portfolio, I could recover all the capital that I have invested in the space for 5 years. So, put harshly, I sell or give up 25% of my upside in return for eliminating all of my downside. The second thing, and many of the people listening to this won't have as much downside to protect. For a lot of people listening to this podcast, if they sell 25% of their position, it can't eliminate their downside. But for me, I can. The second thing is that some of the positions I hold are relatively large relative to the share float. I was only able to acquire these positions because 3 years ago, 4 years ago, 5 years ago, there were no bids. I was the bid. I was the only buyer in a sea of sellers. And so I was able to acquire larger positions at lower prices than would otherwise be the case. If you have a large position, while it's difficult to buy, it's tougher yet to sell. And we have a circumstance where the juniors are flying. There's lots and lots and lots of bids. The time that you come off a large position that's up substantially is when you can. And October is a time that we can. Many of you who have taken the time to listen to the presentation on Introduction to Natural Resources say that the way you make money is by doing what the market demands of you. When the market needs a bid, when there's no bidders, be a bidder. And the market needs a seller. When there's no sellers, only bidders, be a seller. So I'm accommodating the market. There was a point in time when the market wanted to sell me a lot of stock way too cheap, and I accommodated it. The market is willing to pay up now. There are no sellers, so I'm a seller. But make no mistake, I think this market is going higher. I think this market is going higher in October, as I said, which is one of the reasons why I'm a seller. I'll be able to accomplish this goal with minimal effort, despite the relative illiquidity of these securities.
Okay. So basically, just in an effort of full authenticity, you're letting everyone know that you have a chance now to move past the point of concern by only selling one out of $4 that you have in some of these speculative positions, and the market is ready and willing to buy them. So you're accommodating that.
Yeah, I mean, I need to say the financing window for juniors is wide open, and it's wide open 18 months earlier than I thought it would be. There are signs of frothiness in this market. There are companies that I think are worth nothing that are able to raise $15 million. You have a lot of management teams now that the equity finance window is open, rushing to sell stock. What those management teams are telling you is that your money is worth more than their stock. That's where they're diluting to raise money.
Yep.
If they're sellers, they know better than I do, so I'm joining them. The second thing is we've discussed in the introduction to natural resource investing the way that money is made in the pre-production companies and the exploration companies is answering a series of unanswered questions. Uh, what I'm starting to see is there are certain companies where the prices that I had anticipated, if I got a yes answer, have occurred before the question has been asked. If I think that a stock is a decent buy at $1 because I think there's a reasonable chance that I'm going to get a yes answer to an unanswered question, and that'll take the stock to $2. If I see a $2 bid before the question has even been asked, I have learned over 40 years it's a very, very, very good idea to take money off the table and leave only the remnant for the unanswered question, which I'm doing. In the third circumstance, I have 3 stocks in my portfolio, which I regard as mistakes, and all of them are up. I'm used to selling mistakes at a fairly substantial loss. The idea that I can sell these mistakes at a profit is a real blessing. To err is human, to profit from it is divine.
To err is human, to profit is divine. I like that. That's fantastic advice. I've been taking it myself. Okay, we've got quite a few questions here. Did you have any other thoughts, Rick, or should I go to
Just
the?
one. I'm starting with my Sprott cup and my Battle Bank shirt. I'm starting to resemble a NASCAR driver, proof that I'm party to occasional conflicts of interest and eagerly soliciting new ones.
Okay, next time we'll see you with a giant tide on your shirt. Okay. Starting off with some comments that came in. We know we got some listeners overseas that it's like 2 o'clock in the morning here. Paul wants to know what you think of Prospector Metals and their recent drill results.
I like the drill hole a lot, but I haven't put it in context. So I don't want to assign a ranking to it. One needs to use that information in conjunction with other information. I'm, as many people know, just back from Namibia, and I have a bank where our our transaction was approved yesterday. So I've been a busy boy, and there's a lot of homework on my plate that I haven't been able to attend to.
Okay. Richard wants to know, you even alluded to it at the beginning of this one, that you've been trimming several speculative stocks as the price moved above where you expected it would move after they answered the unanswered question. Would you be willing to name a few of these stocks?
I would not. I'm a seller. I'm not looking for competition.
Okay.
Thank you for asking.
Tybor wants to know, hello, everyone. Would like to get Mr. Rule's opinion about Vizsla Silver. Thank you.
I'm a large Vizsla Silver shareholder. Vizsla and Abra are, to me, the 2 obvious exploration names that will develop into must-own takeovers in the silver sector. I own both of them. Both stocks have done well, but both stocks continue to exhibit exploration success. In both cases, it seems to me that the technical team's geological understanding is such that their drilling is becoming predictive. They understand the genesis of the deposits well enough that when they propose a thesis and test it with the drill bit, it's coming up as being successful. And in my experience, that's sort of the fulcrum point for adding ounces cheaply. So I'm a loud, proud Vizsla shareholder.
Okay. Go silver. Daniel wants to know your opinion on Q Energy.
Don't have one.
Okay. He also wants to know, he says, is the deposit quality of I'm assuming he means Banyan, as good as Cone? And if yes, can we expect Predictive Discovery share price to perform like Montage going forward?
Uh, I'm not sure about that question. It seems as though they mentioned three companies there: Banyan, Montage, and Predictive Discovery.
Okay.
Let
He
me
spelled
answer.
Banyan Bankn. Is that another company I don't know of? Or?
Bankan, that's a deposit. Bankan is a
Oh,
deposit.
okay. All right.
Okay,
My bad. I just
that
confused.
that explains it. I
Okay.
would not expect Predictive Discovery to move up as quickly as Montage. Montage is they're both high quality deposits. Montage is a higher quality deposit. It's bigger. It also has the explicit backing of the Lundin family, who are seldom wrong and can always raise money. And finally, they have a management team, a team of mine builders who they recruited from Endeavor Mining, a serially successful crew of mine builders, which leads me to believe that the bucks doesn't stop with Montage. After this deposit is built, that team will finish off and build another deposit. It's a growth gold in the mode of G mining. Predictive Discovery is a high quality deposit and should grow up from here. It wouldn't surprise me at some point in time to see Montage and Predictive amalgamate.
Okay. Han wants to know, can you comment on Dolly Varden recent drill results? Looking at the current mineral resource and market cap, it looks overvalued. Is this more of an exploration upside kind of thesis owning this company?
This is absolutely an exploration upside thesis. Based on the existing reserves and resources in their two deposits, I would suggest that the stock is at least fully priced. It is in a part of the world, the Golden Triangle in northern BC, which excites investors a lot. That's why it's the subject of our next boot camp after this upcoming gold boot camp. And the company is very well run by a guy named Sean Kun. He has made promises to the market for 5 years and continued to deliver on those promises. The consequence of which is that Dolly Varden enjoys a premium share price. But that share price may be justified. There is a suggestion that both of these deposits can grow substantially, and even that the two deposits can be connected. The thing that was interesting about this drill hole is it opened up a lot of space for the continuation of the deposits, and it had some very high grade. It's worthy to note that some of this drill hole, it was well reported, but some of it smeared. The grade that you see across the width of it is really a function of a few high grade sections. So that 3.5 grams is not 3.5 grams contiguous or consistent through the deposit. Rather, there's a large mineralized horizon where a lot of the payable metal corresponds to some fairly small districts. This drill hole is an indication of the extension of mineralization, some ubiquitous mineralization, and the idea that you can step out further than this drill hole did, while in addition delineating the ore block. That's speculative of me, the mineralized block between this drill hole and the prior drill holes. A very exciting drill hole, but take the drill hole for what it is. There's a bit of smearing here. Nothing intentional, nothing fraudulent. The hole was well reported, but the headline doesn't correspond to the hole.
Okay. All right. And Hunter wants to know, what's your favorite Canadian oil producer currently?
I don't have a favorite. I think it depends on who is asking and what they're looking for. I can tell the questioner that I have for a very long time owned names like Ark, Freehold, Prairie Sky, Tourmaline, Peyto, Birchcliff. I have recently been adding Canadian Natural and Suncor. This is a fairly, oh, I also own International Petroleum. I forgot one, the Lundin backed vehicle. This is a fairly conservative list because I think the upside on the Canadian oils is substantial enough that I don't have to take a lot of risk. My real risk here is just that Carney gets out of the way. If Mr. Carney decides to allow Canada to develop its most competitive industry, these stocks will do extraordinarily well. I believe the U.S. oil and gas industry is substantially undervalued, and I think the Canadian oil and gas industry is cheap relative to the U.S. sector.
Okay. Josh wants to know your current ranking for Kenorland Minerals.
I have Ken Orland as a 5. I would have it as a 4, but the stock price has done too well. It has moved the wrong way in the rankings because it's performed so well in the stock. This is a first-class amalgamation of IQ in a market cap this small. They've already exhibited success. They already have a discovery that I think will be economic, which they have a royalty on. If this discovery does prove to be correct, the royalty may be worth the current market cap. Meanwhile, they've embarked on a whole bunch of highly intelligent generative exploration in legacy gold belts funded by other people's money. Very, very, very high quality exploration name, which of late the market has noticed.
Yes, they have. It's gone parabolic. Eric wants to know. Please ask Rick what he thinks and ranks Northern Star and Pan American Silver at the moment. Thank you.
I have Pan American Silver as a 4. It has come a long way very fast. It's come a long way very fast because the free cash flow, particularly from their gold assets, the free cash flow growth in the last 2 quarters has been absolutely spectacular. The icing on the cake here is 2 very large silver deposits, which are not in production and may never become in production. A total of 1 billion ounces of high-grade gold in Guatemala and Argentina, respectively, that are there for investors as icing on the cake, but are not priced into the market cap. I'm sorry, what was the other? That was Pan American.
That was Pan American and Northern Star.
Northern Star. Northern Star I have as a 5. I expect slower improvement at Northern Star. They've had some hiccups. There is some discussion in Australian circles that some of the company's financial performance has come at the expense of not making sufficient sustaining capital investments. We will see in future quarters if that's true.
Okay. And you said for Pan American, it's 1 billion ounces of silver, right? Discovered in
A
Guatemala.
billion ounces of high-grade silver in 2
Yeah.
different deposits, both of which are in the money, both of which face substantial political and social challenges to be put in production.
Okay. And Webster wants to know, I'd like to know Rick's thoughts on Marin Energy. Does he still like it? He must have saw your BNN interview that you noted the Lundins were selling.
I do still like it. I still believe it's selling for half what it's worth, and I'm a huge believer in the exploration upside in Nigeria. I'm a bit distressed that the company has chosen, rather than pursue the Nigerian exploration upside, to decapitalize the company through share buybacks. And I'm more distressed that the 2 largest shareholders, including the Lundins, are participating in these buybacks. It makes me wonder if my estimate of net present value is wrong, because the Lundins are pretty shrewd investors and are unlikely to be selling something that is itself selling at a discount to NAV.
Okay. Not a question, but a pretty cool comment. He sold from London. He says, no questions today. I just want to thank Rick. My whole portfolio is up 130% year over year. Well done, sir.
That being the case, reward me, pay $99 and come to the boot camp on Saturday. Your portfolio will likely increase more.
There you go. We'll see you Saturday. Tybor wants to know, we're talking uranium. I would like to get Mr. Rule's thoughts and rankings on Paladin. Thank you.
I have Paladin as a 5. I'm concerned, although I wouldn't say I didn't expect, capital cost creep in their development programs. I also take note of the fact that the stock has been absolutely on fire. When I was aggressively recommending Paladin in the aftermath of their fission merger, the stock chart looked like the trajectory of a boulder thrown off a bridge. That has turned around. That boulder has bounced mightily. I briefly had Paladin as a 3. It spent some time as a 4. Now it's back up to a 5, mostly as a consequence of the fact that the share price has gone up. It's no longer as good an absolute or relative value as it is. I'm also concerned, as I say, about cautionary statements from the management with regards to capital cost creep in their development projects. Paladin remains, I think, one of the great beneficiaries of the changing structure of the uranium market, where term market contracts with credit grade takers can be used as collateral to obtain construction finance for projects that juniors like Paladin otherwise would not be able to build. This is a wonderful structural change in the uranium market that not one investor in 1,000 is paying attention to, and it's particularly appropriate to Paladin.
Okay. Tillman wants to know, he says, hello, I wanted to ask something about Seabridge. They have a current market value of around $2.5 billion. Up to now, they do not have a high-grade starter pit, as far as I know. In case you would be Rudy Frank, how much would you be willing to pay for that? I guess he's saying, in case you're going to buy them out, what would you be willing to pay for that? I mean, how much would you be willing to pay additionally to the value of the gold contained in that high-grade starter pit?
Well, that would really depend on the nature of the high-grade starter pit. You can't ask that question in isolation. How many ounces is in that high-grade starter pit? How many years does it take to pay out? It's impossible to answer the question in isolation. I take the point that $2.5 billion is an awful lot to pay for an option on well over 100 million ounces of gold, particularly given the remote location. It's worthy to note that under Rudy's tutelage, this is hardly an undeveloped gold deposit. It's a non-producing gold deposit, but well over $500 million has been spent to date advancing and de-risking the project. But the questioner's particular comment, which is of note, is thus far, there is no high-grade starter pit. This is a project that will likely take $8 billion or more to put in production. And the beauty of a high-grade starter pit is that somebody who puts up $8 billion wants to get as much of it back as quickly as they possibly can. This is one that even at today's gold price, if you build it, while it will produce profitably and at reasonable cost for a very long time, the payback period, which impacts return on invested capital and return on capital employed, is lowered by the length of the payback period.
That deposit, is there some kind of like, I don't know what you'd call, what do you call it when there's the one spot that comes up that creates this starter pit, like it comes out from the magma and like that's where they start the point? Is it?
Yeah, I mean, Bob Quartermain found one there. The Brucejack Fault was an area with sufficient rock preparation that when the pregnant fluids were coming out of the magma chamber and up into the surrounding rock, there was one area where the rock was less dense, where the fluid flows could come in, recede, and impregnate the host rock in a way where there was grade. Mostly, this is a sea of low to medium grade gold. Where there is sufficient rock preparation, where there's a major fault, and in particular, where there is a major fault that's cross-faulted, like the Brucejack Fault, you get some very large economic accumulations. The Brucejack system is now 7 million ounces and counting. Thus far, on the rest of the project, a similar zone of rock preparation has not been encountered. The chance that within 125 million ounce envelope, there isn't a second zone of rock preparation, one that might not be able easily to be discerned from surface, the probability of that is nil. There is some part of that dome where there is sufficient rock preparation to enable a starter pit. A starter pit large enough to incent immediate production, I don't know. And frankly, what I do know is that there is no starter pit yet, but there is one there. Whether they'll find it in time, different question.
Okay, so it exists. We just haven't found it yet.
Correct.
Okay. Okay, and okay, we got the.
By the way, we'll be talking about Seabridge at length, not in this upcoming boot camp, but in the one about the Golden Triangle.
Okay.
The boot camp after this gold boot camp will be about the Golden Triangle in northern BC. We're going to do a really deep dive into the Golden Triangle. There's a lot of opportunity up there, but there's an awful lot of misperception about it. I've been active in that region for 40 years, a long time. I have the good fortune of knowing all of the good players. I have the bad fortune of knowing a few of the bad players. It's going to be a wonderful, wonderful, wonderful boot camp for people who are interested in speculating in that gold camp.
Awesome. Look forward to it. Okay, we hit Paladin, we hit Seabridge. Patrick wants to know, what's your opinion on offshore UK as a jurisdiction and UK domiciled offshore oil and gas companies? Has any other
I,
offshore jurisdiction, both in terms of regulation and exploration potential, caught your eye? Thank you.
I don't own anything in the UK North Sea, although it's been good to me historically. What I'm seeing is that the independents that control exploration acreage or resources in the North Sea have fairly small targets by now. It's a very mature basin, not unlike the US Gulf Coast. The consequence of that is that I am not a player. As a regulatory jurisdiction, I would consider it okay. By the way, I consider onshore Great Britain a no-go zone politically. Uh, but the change in the dynamic around the oil and gas business, away from frontier exploration, in fact, away from conventional exploration, towards shale-centric, basin-centric, tight formations, which is to say capital development as opposed to exploration, has led many investors, myself included, away from more mature conventional basins like the North Sea.
Okay. Victor wants to know, what's your view on Guanajuato silver after yesterday's share price drop due to the equity raise?
Guanajuato Silver it's a company I think that's fairly leveraged the silver price, but I wouldn't describe it as cheap. I don't own Guanajuato. I've taken a look at it for a few times. There's a bunch of people behind the company who I hold in fairly high regard, and I was always predisposed to want to own it, but I could never make myself own it once I reviewed the technical information. One thing those guys are very good at, they're sophisticated, is when there's money on offer, they take it. And that's what they did. I said at the outside of this broadcast that one thing that happens, one thing that you notice, that when companies complete fairly large equity financings, the good news is they don't have to finance again for a while. The bad news is they're making a valuation call themselves. They're suggesting to you that they believe that your money is worth more than their stock, and they often know a lot about the value of their stock.
Yeah, that's kind of a kindergarten red flag to notice if the guys are selling for cash. Maybe you should too. Follow up. What are Rick's favorite coal names at today's prices? Thank you.
I don't have a coal stock that I can buy. Part of that is that there's been easier to make money other places, and I haven't looked at the coal stocks as thoroughly as I used to. But the second reason is that, particularly with regards to industrial materials, bulk commodities, it's important to win what I call the last man standing contest. People who don't know what that means need to consult Introduction to Natural Resource Investing at the Rural Classroom. But briefly, it means that deposits have to be large enough that matter. They have to be in the best cost quartile worldwide in their commodity segment, and they have to be in the best quartile worldwide with regards to returns on capital capital employed. In the coal business, most of the best coal deposits in the world are controlled by companies who produce many commodities. They're not pure play coal plays. The pure play coal plays may have many other attributes, but they do not, from my point of view, at least for the most part, meet the last man standing contest. I would suggest that my favorite coal equity worldwide is probably Glencore, which is a diversified mining company, which is to say, coal isn't critical to it, but it's critical to coal.
Yeah. Okay. Alan wants to know, please comment on your continued modest ranking on Dakota Gold.
I don't think that 5 is a modest ranking. Less than 20% of the publicly traded mineral exploration stocks worldwide enjoy a 5 or a 4 ranking. I'm highly attracted to Bob Quartermain. I'm highly attracted to the shadow of the Homestake head frame. I note that the stock is up 5-fold since I first bought my stock. I'm not the only one who has noticed the attractiveness of this. There are a lot of fives in my rankings that I don't own for various reasons. Uh, Dakota is one that I do own, and I own a lot. If you saw a share price decline in Dakota and you saw panic among shareholders, hopefully accompanied by some sell recommendations for major brokerages, this stock would be a 4 or even a 3.
Okay, we'll cross our fingers. We've got another short coming. Alexander wants to know. Oh, he's asking about the went out at the symposium, Tectonic Metals.
Tectonic has had a good run. I own Tectonic because I have a high regard for the people and the exploration concept. I don't like sole risk exploration, but I need to say I like their drill holes and I like their orogenic gold model. Tectonic is one of those where my selling is completed. I have reached the point of no concern on Tectonic. This is not disrespect for Tony Retta or me souring on the exploration projects of their gold target. Merely, it's a stock that gave me too much too fast and allowed me to get to the point of no concern with very little effort.
I interviewed them at the symposium, and they had drilled something like 84 drill holes and not missed a single one. Hadn't had a dud yet. Have they done any more drilling, or are we still going off that data?
Well, I think what you should say is that they hit gold in every hole.
That's a
Not
better way of putting
every
it. Yeah.
hole exhibited economic mineralization or expanded the ore body per se. What they have is a large mineralized body, some of which appears economic.
Okay. Well said. David is asking about Centaurus. He says it's been itching up. Has anything special been going on?
No, I think the negative furor engendered by some difficulties that they were perceived as having in socio-political context has faded away, which is to say, I think what happened is that the sellers got exhausted. Prices are always set in the near term on the margin between supply and demand, and there was a lot of supply around some discussions about the local politics and sociology, similar, by the way, to what affected Meteoric.
Okay. Yeah, I've been trying to buy that one the last week or so, and I'm just a day late and a penny short on every limit order, and I'm afraid I was just a little too cheap.
Relax. Every month, something happens with these stocks where you you get a buy at a price that you didn't think was possible.
Okay.
This I was taught these things they're like commuter buses. Don't break your leg running for one. There's going to be another one by in 15 minutes.
Okay. All right. Okay. Thank you. I needed to hear that. David's also asking about GoviX. Any chance of GoviX coming back alive? Seemed like it's slowly been coming back.
GoviX is moving up as a consequence of what they're doing in Zambia. They have two deposits, the market should know, one in Zambia, one in Niger. The one in Niger is the best project, but it's uncertain at this point in time whether they or the government of Niger owns it. The government of Niger has an army and GoviX doesn't. There's a different deposit in Zambia that is moving along the pathway to production. And I think the increase in GoviX has to do with the fact that the sell-off in the share price around Niger was so strong that some people are suggesting that the company is selling at a discount to the value of the Zambian asset with no provision made whatsoever for any recovery the company might enjoy in Niger. Understand that this is highly speculative. Frontier exploration and development in countries where in the course of Niger, while it's a very well-established uranium province, the sociology and politics of mining is being called into question. And in Zambia, a country with a strong mining tradition, including a history of stealing copper mines, ZCCM, admittedly an old example, but one where there isn't much uranium production. So you're dealing here with a lot of uncertainty. It is worthy to note that GoviX is named after Govind Friedland, son of Robert Friedland. So in the right set of circumstances, the company certainly has access to capital.
Okay. Piggybacking on that, Global Atomic, when I talked to Scott Melby last time, he said they were kicking tires over there, and that's about as much detail he went into. Uh, any updates on that one?
Scott Melby would be the one to talk to because the way to make Niger work would be either going in behind the Chinese government or going in behind the U.S. government if the U.S. State Department was looking to get active in Niger. The mining industry in Niger really has been a function of political interference by the French state and Orano for 50 years. And people in Niger got sick of that. They kicked the French out, and there's been a lot of collateral damage for mining companies from every country as the country and its mines ministry and its finance ministry sort out what its future looks like. The Russians with Wagner were very, very, very quickly in there, promising the government of Niger, how would you say, military protection, internal dissidents, provided that people associated with the Russians got access to mineral deposits, including the one controlled by General Atomic, by Global Atomic, I'm sorry. The Chinese have also been active. And now the U.S. State Department is starting to flex its muscles there. So there's a form of the great game taking place, and I expect that companies that are perceived as having very strong state backing from any of China, Russia, or the United States will do well. Companies that are suspected of having ties to France will not do well.
Okay. Any comments and ranking of Headwater Gold?
I'm a fairly large Headwater shareholder. I have it as a 5, albeit that's a speculative ranking.
Okay. Han wants to know, what's your opinion on Wallbridge mining and Juggernaut exploration?
I don't know enough about Juggernaut to comment. I like the Wallbridge people. I like where they operate. I haven't seen enough data to suggest that I need to buy them. I have Wallbridge as a 6. Perhaps if I did more work, I'd have it as a 5.
Okay. Um, Zahara wants to know, in terms of quality of the deposit, how would you compare Abra versus Vizsla Silver? You said yesterday that Abra is a near certain tier 1 and Vizsla is probably a tier 1. Why the distinction, or any other qualitative comment you'd like to make?
Vizsla is a higher grade deposit, and in its earlier years will be more economic. Abra has the chance of being a giant, a monster deposit. Lower grade, likely lower return on capital employed because you'll have to employ more capital. And the thing's in the middle of nowhere. Its beauty is that it has the potential to become very large. Vizsla is large too, just not large in context. It is much higher grade, and it is surrounded by infrastructure. There are sociological and political challenges around Vizsla. Western Mexico, the Sierra Occidental, is the sort of heartland of the narcotraficantes. And so there are those challenges.
Okay. Martin wants to know, hi, Steve and Rick. What's Rick's opinion on Falco Resources? Sean Rosen recently became a strategic advisor.
Yeah, I'm interested in Falco. I'm less, how would you say? I have less of a psychological need for the alleged political stability of Canada. I think the deposit is good, but not yummy in my grandmother's parlance. I have Falco as a 5, largely because of the quality of the people and the backers, including Sean. It enjoys speculative favor. The biggest source of mine exploration finance in the world is Canada. Canadians, like Americans and everybody else, are ethnocentric, and they believe Canadian deposits are better than other deposits. So if you enjoy the favor of 40% of the exploration funding community worldwide, you will always have a lower cost of capital, particularly if you have attracted the attention of people like Sean Rosen, who have raised billions of dollars of capital and been more often right than wrong.
Okay. And we got about 15 minutes left here. And so, everyone, we are pulling the questions from Rural Classroom Plus students. So, if you're watching on YouTube, Twitter, or any other outlet, that's where we're pulling the questions from. So, head over down using the links down below or go to ruralclassroom.com and join us there. Daniel wants to know, what do you think about Rio 2 buying a 15% stake in Royal Road Minerals?
I'm also a Royal Road shareholder. Uh, the Royal Road Group are absolutely spectacular prospect generators. They're great explorationists. They were part of the grassroots team from Rio Tinto when Rio Tinto was a great exploration company. They are early. These guys go into areas right after the flak jackets have come off, but long before political security has been established. Rio 2 didn't buy that stake. They stole it. It was really, really, really cheap. A mistake that Rio 2 would make was using money that they needed themselves. If you keep a 15% stake in Royal Gold, pardon me, Royal Roads, and then you issue stock yourself to raise money, what you've told the market is that you think that Royal Roads is cheaper than you are.
Yeah.
I own a lot of Rio 2. I'm close to that management team and have been for a very, very, very long time. Assuming that they did this with spare change, they didn't spend a lot of money. What they did is they got a window to the global exploration ideas of one of the finest groups of grassroots prospect generators in the planet.
Yeah, they recently got a bid out too for two companies to see if they can establish a permanent water line up there instead of having to truck it. So we'll see
Right.
how that goes. Could be exciting. That's the next step. All right, and where are we? Patrick wants to know, Moxico Resources has recently seen investment interest from both Ecora and Queens Road Capital. Is this a company you would have an interest in if it was ever public?
I have an interest in it because I know the people who invested in it, and those are high quality people. I am not a shareholder of Acora, and it could be that Acora is able to finance out of private family offices, or I do know that they have been talking to some fairly high profile Middle Eastern investors as well. So I may or may not get the opportunity.
Okay. Zahara wants to know, if Discovery Silver gets approval for Cordera, do you think they can manage execution on both Porcupine and Cordera? Also, any comments on their valuation and your ranking of Discovery Silver? Thank you.
I have Discovery as a week 5. Both deposits are superb deposits. For people who don't know, Discovery Silver has a very large, but medium to low grade uh, deposit in Mexico. The deposit will require a lot of upfront capital expenditure, and mercifully, the deposit itself attracted the attention of Tony McCooch, the CEO, who I've done business with for a very long time, who is one of the finest mine builders on the planet. While Tony was advancing Discovery Silver, he got caught up in the whole Mexican permitting uh, imbroglio of the last 3 years. I have been informed that there are 5 foreign mining projects in Mexico where permitting is imminent, and I have been told that Discovery is one of those. Whether what I've been told is true or not is a different circumstance, but I have that information from somebody who's unusually well informed with regards to Mexican politics. While all of this was transpiring, Newmont decided to sell off a whole bunch of its tier 2 deposits, including Porcupine, a venerable mine in Canada. And Tony McCooch decided that he would strike while the iron was hot. He was able to raise the money to buy Porcupine. This Archean Canadian Shield deposit is right in the province where Tony made his reputation. He has built, well, I've known him, 4 large mines in Canada. And I believe that he has the bandwidth to uh, simultaneously restore Porcupine. And when I say restore, it was used by Newmont as a cash cow. Newmont did not make enough development expenditures or sustaining capital expenditures. So the mine needs some love, care, and attention. And Tony is a very good mine lover. I would expect that he will go slow on discovery until he has Porcupine tuned up the way the good Tony McCooch mine is. And then I think that you'll see him focus his love, care, and attention on discovery, unless in today's silver market, some bigger silver company, say a Pan Am, decided to take discovery off his hands.
Okay. Luce and a bunch of other people in the comments are saying thank you for the recent interview with Aya Gold and Silver's CEO, Benoit LaSalle. So I watched that a couple of times. That was fantastic. Thank you. And Luce wants to know, hi, Steve. Hope you're doing great. I am just Capital, Luce. Good to see you. Could you please ask Rick if this gold bull market is different than the previous ones, given the BRICS effort to deviate from the dollar and China building vaults around the world to be able to store gold and exchange it for yuans?
The answer to that is yes. This gold bull market isn't just about the citizens versus their government, which is what most prior gold bull markets have been about. This is about efforts by the United States government to weaponize the U.S. currency, to further the U.S. government's foreign policy objectives by utilizing the U.S. currency and U.S. Financial obligations. The U.S. efforts to, as an example, weaponize the SWIFT banking system, which is not a U.S. asset, and the U.S. efforts, irrespective of how you feel about Russia's foreign policy, to steal $300 billion worth of Russian assets, have called into question for governments around the world the efficacy of using the U.S. currency or U.S. financial institutions or U.S. treasuries to the extent that they did in the period 1982 to 2022. Governments around the world who think they might find themselves having issues with the United States government, that would be virtually every country in the world, are beginning to understand that there are strategic reasons not to own the US dollar. The efforts of the BRICS countries have a lot to do with that. The difficulty for the BRICS countries is that as little as they trust and like the United States, they trust and like each other less. The consequence of that is that settlement outside the US dollar was problematic. The Chinese didn't want to end up with a bunch of rubles. The Brazilians, didn't want to end up with a bunch of rand. The efforts by China and other central banks to build up large gold holdings and allow transactions between the countries to settle in their respective BRICS currencies, but then be fairly immediately transferable to gold, changes all that until the debtor countries, most of them, run out of gold. In other words, I think it's a pretty good solution for 2 years. I think it'll begin to fall apart for the same reason that you don't see a gold standard in any country on the planet. There is no governmental body that wants to be held to the discipline that involves a gold standard, including a gold standard for transactions between two countries. So I think it'll work until it doesn't. I don't think that China, as the creditor of last resort, has any interest in loaning its gold to Brazil uncollateralized, or loaning its gold to Iran, or loaning its gold to Russia. And the foreign reserve holdings of those countries, if converted to gold relative to their trade deficits, call into question that whole superstructure. That's a long-winded way of saying that U.S. foreign policy and the weaponization of the U.S. dollar has changed the dynamic of this gold bull market. But it's not going to change the outlook for the U.S. dollar as the world's reserve currency. It's going to chip away at the edges, but there's not going to be the sea change that you're seeing on so many internet posters and so many newsletters. The drama is overstated.
Okay. All righty. We're getting close here. Last one from Han. Hi, Rick. Can you comment on Liberty Gold? What ranking do you currently give them? Thank you.
I have Liberty Gold as a 6. I note that Cal Everett is less involved with the company than he used to be. He was one of my reasons for owning it. Large, low-grade deposit, but permitting difficulties. It's not on private land. It's on federal land. And the stock has run up a lot. I moved it from a 5 to 6, not because of any change in the underlying deposit, but rather because my friend Cal is less involved and also because the price ran up so much.
Yeah. Okay. Okay. We're tapping on the hour here. Do you have any final thoughts, Rick?
Yeah, I want to see everybody who is on this call at the boot camp on Saturday. We're going to do a great job, and we're going to do a great job in a sector that is red hot. Despite my selling, I think the gold bull market is not long of tooth. I think the gold bull market is the corollary of the dollar bear market. And while I believe the dollar is temporarily oversold, I continue to believe that the dollar will lose 75% of its absolute purchasing power over 10 years. If that's true, it wouldn't surprise me over 10 years to see the gold price increase mirror the decline in purchasing power of the US dollar. And it wouldn't surprise me at all to see a reasonable index of gold companies double the share price performance of gold. I would caution people, however, and this argues for attending the boot camp as well. I would caution people that most gold companies are valueless. Most gold companies are stories. They're floating abstractions. They're lifestyle-oriented companies. And the ability to separate in movie parlance the good from the bad from the ugly is what's going to allow you to take advantage of this gold bull market or not. I would also tell you that all of the boot camps are meant to be used in conjunction with the rural classroom. There are 230 hours, I think, of instructional programming at the rural classroom. Never mind this Q&A, which is free every week that I'm in town. In particular, Introduction to Natural Resource Investments tells you how to do your own rankings, rank your own companies, ask your own questions. So I want people who are serious about their portfolios to attend the boot camps, but not attend the boot camps as fans, but rather attend the boot camps as educated participants.
Yes. Getting a lot of comments here in the classroom. Dominique will be there. A lot of other people. I'm looking forward to it. They're always very, very profitable if you study them, watch them over and over, and implement the lessons that you learn in them. Thank you for doing them, Rick. It's a pleasure to be a part of it.
Well, thank you. And thank you to Albert, who's in the other room, for causing all of this to occur.
Yes. And thank you guys for tuning in. Be sure to, if you have been watching on YouTube and you wanted to get that question in, but you couldn't quite do it, come on over to the Rural Classroom. Go to ruralclassroom.com, sign up. There's a free version, or we have a premium service as well, where you get to submit questions to Rick like this once or twice a week. So thank you guys for being here. Rick, you have a great rest of the day, and we will see you on Saturday in 2 days at the boot camp.
Look forward to it. Thank you.